It's Monday, October 20th, 2025. Welcome to your news update on Blip Brief, small but almost everything updated every weekday. Happy Diwali to you. Diwali marks a time to reflect, renew, and illuminate our paths with purpose, positivity, and collective progress. And speaking of lighting paths, the Indian market certainly seems to be doing that, a really positive start to this holiday week.
Absolutely. Feels like there's some real optimism in the air, especially ahead of the Muhurat trading.
So what did we see just before the break?
Well, the Sensex closed up plus 0.6%, and the Nifty 50 gained plus 0.5%. Pretty decent.
And that historical trend around Muhurat trading, it often does give a bit of a psychological boost, doesn't it?
It really does. It sort of sets a tone. And, the early signs are good gift Nifty was trading higher, suggesting we're probably looking at a positive open.
Okay, so if this keeps up, what are the levels analysts are watching? Are we just talking about a festive bump or something more?
They're definitely looking beyond just the celebration. Key resistance levels are the focus. If the Nifty clears those hurdles, some charts are pointing towards, well, potentially quite a high target, maybe around 26,277.
Wow. But who's actually driving this move? Is it broad-based?
That's the interesting part. It's actually quite concentrated.
Oh. Where are we seeing the strength then?
It's really all about domestic demand. Think festive spending. The BSE Consumer Durables Index, for example, jumped plus 1.5%.
Makes sense. White goods, electronics.
Exactly. And Nifty FMCG was up plus 1.4% too.
Any specific stocks leading the charge?
Yeah, clear consumption plays. Asian paints had a huge jump, up plus 4.2%. And M&M, strong auto demand there, was up plus 2.5%. It really feels like the Indian consumer is outspending.
And this seems to be the recurring theme, if the domestic story is so good, what's happening with the global-facing sectors? IT still feels heavy.
It's the big contrast, isn't it? While everyone's celebrating domestically, the IT sector is really feeling the pinch from, well, global uncertainty, softness in the U.S., in Europe.
So that divergence continues.
Absolutely starkly. While the market climbed, Wipro plunged negative 5.1%, and Infosys dropped negative 2.1%. It really shows India's growth right now is kind of decoupling, relying heavily on its own internal strength.
Which makes those Q2 earnings reports that landed over the weekend even more critical, right? To see if that domestic strength is actually translating to corporate bottom lines.
Precisely. They're the proof points.
Let's start with the banks then.
Yeah.
HDFC, ICICI. How do they fare?
They look pretty solid, actually. HDFC Bank reported an 11% rise in net profit year on year.
Okay, profit's good, but what was underneath that?
Well, the really encouraging sign was the deposit growth. Average deposits were up 15.1%.
Right. That signals real trust, doesn't it? People putting money into the system.
Exactly. It shows stability.
Yeah.
And ICICI Bank, also a strong print. Profit after tax up 5.2%. Net interest income grew 7.4%. So the core financial plumbing seems, quite healthy.
Good to hear. And what about the big one, Reliance Industries? Their results always move the needle.
Reliance also delivered strong growth. Net profit for the quarter jumped 14% year on year.
And profitability, EBITDA.
EBITDA was up 14.6%. What's interesting with Reliance, though, is why. They pointed to strength in retail, a recovery in the oil to chemicals business, and, importantly, better monetization from 5G.
So 5G has finally started to contribute meaningfully.
It seems so. It confirms that whole diversification story, moving beyond just industrial to tech and retail, is really gathering pace.
Okay, so that domestic picture looks, well, reasonably robust, but we can't ignore the global backdrop, which feels a lot more choppy. Let's talk China first.
Yeah, China's definitely facing some headwinds.
Yeah.
Q3 GDP growth slowed down to 4.8%. That's a one-year low.
And the reasons? Still the same culprits.
Pretty much. That ongoing property slump is a major drag, stressing local finances. And then you have the persistent trade tensions with the U.S. layered on top. It's a tough mix.
And those trade tensions are biting in specific areas now, like rare earths.
Yes, very clearly. China's export controls are having an impact. We saw rare earth magnet exports drop by 6.1% in September.
Which, of course, fuels the whole geopolitical game around critical minerals.
Exactly. And you see other countries responding,
Yeah.
like Australia, making a direct pitch to President Trump, offering to step in as a supplier of critical minerals to the U.S., trying to reduce that reliance on China. It's a strategic realignment happening.
Speaking of President Trump, there were some significant statements reported over the weekend regarding geopolitics, energy, and Ukraine. Let's just relay those impartially. First, on India and Russian oil.
Right. Sources reported that the former president issued a warning, essentially saying India could face massive tariffs if it keeps buying Russian oil.
Okay, linking energy policy directly to potential trade
Yep.
actions.
And then on the Ukraine conflict.
What was the suggestion there?
The suggestion reported was that to end the war, the Donbas region should be, quote, cut up, with most of it staying under Russian control.
A significant potential shift from current policy, accepting territorial changes.
A very different approach, yes.
Meanwhile, other global flashpoints remain active. The Gaza ceasefire seems fragile.
It does. Renewed fighting led Israel to briefly halt aid, claiming Hamas violated the truce. So, still very tense there.
And just to throw in something completely different, but highlighting general instability, that bizarre, high-profile jewelry theft from the Louvre in Paris.
Right. Quite incredible. Makes you wonder.
Okay, let's bring all this global uncertainty back to the money markets. How is the rupee holding up against these headwinds?
It's definitely feeling the pressure. The rupee has weakened to record lows. And a key measure, the real effective exchange rate, the REIR, that's fallen to its lowest since October 2018.
So when we talk about the REIR being low, what does that actually mean in practical terms for, say, Indian businesses or consumers?
Well, it's a double-edged sword, really.
Mm-hmm.
On one hand, a weaker rupee theoretically makes Indian exports cheaper and more competitive globally. That's the upside. But the downside is that imports become more expensive. Think oil, gold, electronics components. That feeds into domestic inflation and hits consumers' pockets.
Right. Which leads us neatly to commodities. Gold often reacts to geopolitical stress.
It does, and we saw a bit of that. Gold prices recovered modestly, edging up slightly after pulling back from those recent record highs. It's that classic safe haven demand kicking in amid all the uncertainty.
But silver didn't follow.
No, quite the opposite, actually. Silver had its biggest drop in 6 months, falling more than 6%. Seems like profit-taking after its recent very strong rally. A real divergence there.
And oil prices. Crucial for India, of course.
Oil prices actually slipped a bit.
Oh, that's helpful for importers. Why the dip?
A couple of reasons cited. One, expectations of increased global supply. And two, those worries about U.S.-China trade friction potentially hitting global growth and, therefore, energy demand down the line.
Okay, let's shift back home then to India's festive mood. Sounds like businesses are really banking on a strong Diwali season.
Oh, absolutely. The estimates are huge. Companies across the board, clothes, phones, appliances, they're forecasting sales potentially up to 50% higher than last year's festive period.
50%? That's massive.
It really is. It points to strong consumer confidence, maybe some pent-up demand, and you also have PM Modi's Swadeshi push, encouraging people to buy India-made goods, which likely adds a bit of tailwind too.
So beyond the immediate spending burst, what are we seeing on the policy front? Any longer-term structural moves happening?
Well, one potentially significant development is the government considering a $50 billion Bharat Sovereign Wealth Fund.
A sovereign wealth fund, what's the thinking there?
The idea seems to be generating non-tax income through globally diversified investments. It's about building a financial buffer, making government revenues a bit less reliant on just domestic taxes or borrowing, especially during downturns. It diversifies the nation's income streams.
Interesting. Sort of long-term strategic thinking. Okay, what else? Any news on the infrastructure or regulatory side?
Couple of things. In the electric vehicle space, the NCLT, the bankruptcy court, admitted an insolvency case against Blue Smart Mobility Tech.
Ah, the all-electric ride-hailing company.
That's the one. It does raise questions about the financial sustainability of scaling up EV infrastructure really rapidly.
Is
the investment running ahead of the immediate commercial returns? It's something to watch for the whole sector.
a potential stress point. And in telecoms.
The Department of Telecom is proposing to hike the usage fee for satellite spectrum. They want 5% of adjusted gross revenue, AGR.
And the industry wanted less.
Yeah, the regulator, TRAI, had proposed 4%. So that extra 1% could make a difference to the business models of companies planning to offer satellite broadband, especially the newer entrants.
Right, affecting profitability. Okay, let's wrap up the business beat with IPOs and startups. Still seeing activity there.
Definitely feels like the window's open. Midwest IPO allotment is getting finalized today, and that issue was massively oversubscribed, 92.36 times.
Wow, huge demand.
Shows there's still a lot of investor appetite for the right kind of offerings. And looking ahead, the e-commerce platform Meesho filed an updated prospectus for its IPO. They're looking to raise around $800 million.
So big tech potentially coming back to the market.
Seems like it, yeah, a sign of improving sentiment, perhaps.
All right, that covers the market and economic front. Let's shift gears for our final segment, the innovation brief. This week, something focused on precision and cost, A new laser.
That's right. It's quite a neat breakthrough. Researchers have developed a new type of laser, but the real innovation isn't just the laser itself, it's how it's made.
Okay.
It's fabricated using standard microchip technology. Think semiconductor manufacturing processes.
Right, like making computer chips. So what's the benefit of doing it that way?
Well, current high-precision lasers can be quite bulky, complex, and expensive to produce. By using existing microchip techniques, they can make these new lasers incredibly compact and potentially much, much cheaper. Plus, you can mass produce them.
So democratizing precision laser tech, essentially, does it perform as well?
Apparently, yes. The sources say it significantly outperforms current models in speed, control, and, well, precision. Because you can make them small and cheap. The idea is they can be integrated into all sorts of sensing applications.
Okay, like what? Give us some real-world examples.
The big one mentioned is LiDAR navigation systems.
For self-driving cars.
Exactly. Making LiDAR faster, more precise, and critically cheaper could really accelerate the rollout of autonomous driving technology. It moves LiDAR from being a high-end, expensive component to something potentially standard.
That's a huge potential impact. Any other applications?
Advanced gas sensing is another key area. Because these lasers are so precise, they can accurately detect specific gas molecules.
So for environmental monitoring or industrial safety.
Precisely. You could deploy networks of these tiny low-cost sensors for real-time, highly accurate monitoring in a way that just wasn't feasible before because of cost and size. It really could transform how we monitor the environment around us.
Fascinating. From the buzz of Diwali spending driving the Indian market, even amidst global headwinds and geopolitical warnings, all the way to a tiny laser made on a microchip that could change how cars navigate. It's quite a range today.
It really shows the different forces at play, doesn't it? The domestic focus versus global pressures, immediate market moves versus long-term tech shifts.
And that really underscores the challenge and the opportunity for you listening, connecting those dots, seeing how, say, trade policy might eventually influence commodity prices or how a lab breakthrough could impact everyday technology. That's what this deep dive is all about.
And just before you go, a quick note, this deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.